Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're speaking about Welspun India, arguably one of the stocks of the day. The stock was up over 4% last I checked, and this is on the back of results. It's quite a pretty picture if you look at it. The revenue number has grown about 12%, but most importantly, you've seen significant improvement in the margins and quite an expansion in the PAT number as well. We're joined by the management, Dipali Goenka, Managing Director and Chief Executive Officer of the company. Dipali, thanks as always for taking the time. And we've spoken in quarters gone by, you've spoken about the fact that destocking is happening in your key market, and that seems to have been completed in the first quarter, where you're seeing an improvement in orders from there. Is that the primary driver? The home textiles business doing quite well, but I think you're also going to be quite pleased about the emerging businesses as well.
Yes, Alex, thank you for inviting me today. So let me just give you a perspective. So destocking happened earlier, and I think the half one looks pretty good for the core business, and that will maintain because, I think there's a prepping for the holiday season and the Black Friday that happens in their quarter four. So yes, that's a great opportunity, and half one looks pretty amped up for us, definitely. And the half two also, we continue to maintain our commitment towards a growth of 10% and an EBITDA of 15%. And now if I talk about the emerging businesses, our flooring business definitely actually grew by 33% year on year with a top line of 225 crores and a EBITDA of around 8%. And we definitely see an upside here because of the China Plus One. Welspun India's flooring manufacturing facility is one of the most modern facilities this side of the world, and that actually gives us a great opportunity, not only in the United States of America, but also in UK, Europe, and even in New Zealand and Australia too.
Okay. I'll delve a little deeper into that just a bit. But speaking about the margin number, because I think you'd guided for 15% or thereabouts, and you said that's a sweet spot. What's driving that expansion? Because I think 80 basis point improvement even sequentially on the margin number.
The important aspect, as we had earlier spoken about, were the three C's, the cotton, container, and the coal. And I think all of them have come down quite considerably. And of course, our capacities are running full throttle. Right now, the quarter one, they were running around 80%, whether it was towels and rugs. Sheets was at around 50-60%, which also will be starting to go around 90-95% by the second quarter as well. So I think it is also about leveraging our fixed costs as well, Alex. So definitely that is one aspect to it. The commodities coming down has been a very important aspect to it as well. So yes, it is also the economies of scale that have kicked in too. And demand remains good as well for the half one too.
Okay. You've in the past explained the geographical spread of the business, and you've spoken about the fact that a little over a third of the home textile business comes from the US. And you've also pointed out that it's going to be amping up for you based on what you see in the demand trends. But can you break it down for us further in terms of some of the other geographies? You pointed out earlier that the UK is not really picking up as much as one would hope.
So yes, I mean, the landscape, and US consumes the maximum home textiles in the globe. I think there's one thing I must tell you: the US economy has been very resilient. The inflation numbers were 3% down, in the past 2 years, the lowest ever. The retail showed resilience of around 1.4% kind of a growth there. So yes, United States continues to be strong. However, UK remains flat. But Europe has seen a little upside, also owing to the opportunities that we have in our the license that we have as Disney, that actually has given us additional share of shelf as well in UK and Europe. The hospitality segment in the United States still kicks in strong. So yes, that's again a huge opportunity for us. The markets that I spoke about, Australia, New Zealand, Japan, also are great markets for us in the terms of our segments for hospitality, core businesses, as well as flooring. flooring has actually kicked in into these markets of UK, GCC, like, Saudi Arabia, United, Emirates, Japan, Australia, and New Zealand as well. So our share of shelf across the globe is increasing, owing to not only our home textiles segment, but also to because of our flooring and our advanced textiles as well.
Fantastic. You've spoken a lot about flooring so far, and I was hoping to have a separate conversation about that. But let me then ask you about that, because you said 33% increase in revenue from the flooring business. I believe it's the highest that you've clocked so far. You've seen EBITDA margins of over 8%, and that also is a considerable improvement over last year as well as the recent quarter. What's driving that, and is this the steady state? Do we see further growth from here? What's the potential? Because currently it's still about 10% of overall revenue.
So, Alex, we are very optimistic of our flooring business now. I know it's been 4 quarters we've been talking about it, that, what's been happening, because, but I think now we see a great opportunity in the terms of the China Plus One, Alex. I think that actually lays a great kind of a great opportunity globally, especially in the United States of America as well, for the hard flooring and soft flooring. This time, our soft flooring actually was contributing to 70% of our total, basket, and the rest was hard flooring, which actually, as we go forward, will be around 50%, as a share. But if I look at UK, Europe as well, hospitality opportunities are there. We just signed up a contract with one of the hospitality chains in UK for 2 years. Australia, again, another huge opportunity. India actually has grown 24% in the terms of institutions and hospitality. And residential is also growing, which we'll see also grow further forward, in the next 2 quarters as we go on. But yes, overall, flooring we feel very, very bullish about right now. It's all, I think. One more thing I want to add on. When we talk about flooring, a lot of the supply chain was dependent on China. Now we are basically focusing on indigenizing the whole supply chain. And that actually is also going to give us a great upside in the terms of our working capital exposure, also in the terms of our TAT, and also our margins as well too.
Okay. So Dipali, here I'm asking broadly as well, because as an industry and also as a company, you've benefited from certain geographies moving away from only procuring from China, and that China Plus One at play, right? But in certain segments, not in the textile space, if I talk about chemicals or if I talk about a few other industries, they're seeing increasing push by China to flood markets at considerably lower price points. Is that a challenge that you're going to face as well, or are you well and truly beyond that? Have you now entrenched yourself well enough in these markets?
So I must tell you, first of all, for India, I think India's positioning in the terms of manufacturing for home textiles and products like flooring and all actually remains very, very strong, as a lot of retailers are committing to India as their sourcing base. And I think that's going to be a very good opportunity. So I think for us as a country and as a company, made in India for the world is going to be a very important aspect to what we are saying. I think what better than, I think, commodities like cotton that we talk about. I mean, we are the biggest exporters and the biggest growers of cotton here in India. That actually gives us a very steady state kind of a supply demand, and of course the biggest and the largest democracy that we are, and most stable, I think, with our next door neighbors, also holds us in a good state here too, Alex. So I think it definitely puts us in a good positioning as a country, and of course as a company as well. Definitely, I think India is in a good position.
All right. Speaking specifically about utilization levels, you've seen an uptick in almost all of the businesses. However, the last time we spoke, Dipali, you pointed to 65% utilization or thereabouts for the flooring business. You're at around 50% right now, and considering the kind of growth that you're seeing, there's more in the tank, do you think? Do you see a further uptick from here? What is the kind of range that we're expecting?
Definitely, there would be further uptake even in the hard flooring, Alex. So yes, there will be kind of a capacity that we'll see around 60 to 70% going forward as well. And right now, as we are just in the beginning of our manufacturing of flooring, we see that there will be opportunities to debottleneck in certain areas in the terms of soft flooring. So yes, we are working towards that. But I'm very, very optimistic about what we are doing in flooring at the moment. And I think we have enough capacities to take on what we've committed this year, around 1,000 crores of top line for flooring itself alone.
Fantastic. On the top line, for the overall business then, and you pointed to 10% at the start, and I'm actually coming back to that because the last time we spoke, you said 10 to 12% for FY24. You've you hit the upper end of that mark in the first quarter. And just based on the kind of commentary that I'm getting from you over the last few minutes, you seem to be expecting an improvement in Q2 as you ramp up towards certain festivals in your key markets. And you've said in the past that you're cautiously optimistic about the second half as well. So are you being conservative? Do you think that you'll have to up your guidance down the line?
Alex, it's better to be a little conservative in what we say, but I think even looking at the global dynamics and scenario, I mean, as I said, and I will maintain that we are committed to the 10% top line and a 15% EBITDA the year round annually. Half one definitely looks quite decent for us. And half two, we are going to be cautiously optimistic because you really don't know what onslaught just comes and lands at the next, onto you. So yes, that's what it is about. But yes, definitely, and for us in the domestic as well, as I think Alex, I think you would know it better, that India has been a little slow in the quarter one, kicking in on the consumption, which has been down 3.4%. But yes, we have had good order bookings in the preparation for the festive season. So yes, quite bullish about that as well going forward. Our expansion foray continues. We are now in 13,000 MBOs in the country for Welspun, which we're going to be taking to 25,000 by the end of the year as well. Spaces continues to hold strong as well.
All right. Now, the final question has to do about debt. We've spoken about this as well in the past. And I see that there's a small bit of an uptick on the short-term debt in the quarter gone by. I'm just trying to understand what the target is for this current financial year, because I believe you've said that you want to be at a neutral level in 26. Yeah.
So our net debt, as we maintained, in our, is going to be 1,000 crores, and that's what end of the year is. We are committed to that, actually, Alex. This actually quarter saw an onslaught of, Bipper Joy in one of our facilities in Anjar. So, we didn't realize our, sales end of the quarter, and that's one aspect to it. So you will see that kind of an upside. The second, also importantly, is the buyback, which the management took a decision on. Right. So that is something that you see also as an aspect to the net debt. But yes, we are very comfortable and our commitments hold on for the year.
Yeah, I was looking at around 200 crores, right, is the implication for the cash reserves. Yeah. Okay, so that's cool. Thank you so much for joining in. Always a pleasure, Dipali, speaking with you, and wish you all the best for the rest of the financial year.
Thank you, Alex. Lovely talking to you as well. Have a great day.
You too. All right, viewers, there you have it. That was the management of Welspun India, cautiously optimistic about the path forward in the current financial year. Lots more coming up over the course of the day. So stay tuned. This is BQ Prime.